every day trading guru you've ever watched is doing exactly what the platform wants them to do. Not what makes you money, what makes them money through you. I'm about to explain why, and some people really don't want me to. I want to say this clearly before anyone accuses me of anything I'm not saying. I'm not naming a single platform, I'm not naming a single guru. Everything in this video is a pattern. A pattern you can go verify yourself because most of it is disclosed in plain sight, buried in places nobody reads. This video is about one question: who actually benefits when you're taught to day trade? And the answer isn't you. Let's get into it. Here's a fact almost nobody explains properly. A lot of these commission-free trading platforms don't make their money from your subscription. They make it from your activity. Every trade you place gets routed somewhere. Some platforms are paid by market makers for the right to execute your order. It's called payment for order flow, and is publicly disclosed in regulatory filings if you know where to look. The more trades that flow through the platform, the more that revenue stream grows. Read that again. That platform doesn't need you to win, it needs you to trade. Those are not the same thing. Now overlay that with the guru economy. Think about what actually gets rewarded on social media and YouTube. Not patience, no restraint, content. And content needs activity. A guru who says I bought Bitcoin 4 years ago and did nothing doesn't get views. A guru who's posting 5 trades a day, screaming about a breakout, screen recording a green candle in real time, that gets clicks. That gets a following, and very often that comes with an affiliate link back to a trading platform. Every account you open through that link is a referral. Every trade you place after that is activity the platform profits from, whether you win or lose. The guru gets paid on signups, the platform gets paid on volume. The only person whose outcome isn't guaranteed is you. That's not a conspiracy theory. That's an incentive structure. And incentive structures predict behavior better than good intentions ever do. 3 separate academic studies, 3 different markets, one identical conclusion. A study of the Brazilian future markets tracked every person who started day trading between 2013 and 2015. Of the ones who kept trading for more than 300 days, 97% lost money. Only 1.1% earned money, which was barely above Brazil's minimum wage, and that's before accounting for the risk they took to get there. A separate study of the entire Taiwan Stock Exchange, covering 15 years of complete trading data from the 1992 to 2006, found that less than 1% of day traders earned consistent, predictable profits after fees. And in the US, a study of over 66,000 households at a major discount broker tracked from 1991 to 1996 found that the most active traders, the ones trading the most, earned 11.4% a year, while the market itself returned 17.9%. The more they traded, the more they underperformed, simply doing nothing. 3 continents, 3 different time periods, 3 research teams with no connection to each other, same result every time. Here's what almost never gets said out loud. Those studies aren't an accident of bad luck. Day trading requires you to be right, over and over, on short-term price movement that's dominated by noise, while paying spread, slippage, and fees on every single entry and exit. The math is stacked against the frequency of the activity itself. Position trading doesn't have that problem. Fewer entries, fewer exits, fewer chances for fees to eat the position alive, less exposure to short-term noise you can't predict. It doesn't make for good screen-recorded content, but it's a strategy that's actually survived every cycle because it isn't fighting the market's randomness on an hourly basis. So follow the money one more time. The platform profits from your activity, the guru profits from your sign up and your engagement. Neither of these outcomes require you to actually build wealth. Position trading requires none of that machinery. You don't need 5 alerts a day. You don't need a Discord full of urgency. You need conviction, patience, and a position sized so you're not gambling on your own psychology every time the price moves. That's the strategy that was never going to trend because nobody makes money teaching you to do less. I'm not telling you every guru is a fraud. I'm not telling you every platform is corrupt. I'm telling you to ask one question before you trust either one. What happens to their revenue if you stop trading tomorrow?